Good morning, Steve Free in Chicago with the morning grain news. Well, happy Friday. This is kind of a special Friday in which we have the USDA report at 11 o'clock. It's interesting to note that in 13 of the last 17 years, the USDA September corn yield has been above the average trade guess. 10 of the last 12 years, soybeans yield has also been above the average trade guess. And the trade is looking for higher yields in corn and beans from the August numbers. This will also be the first time USDA has some objective yield survey data to add to revised farmer survey and satellite data. For me personally, I think that the weather over the last 30 days suggests that maybe the U.S. corn yield is a little bit lower than what the USDA said in August, and that maybe the bean yield is a little bit higher. Obviously, the October report will have more harvest data for the USDA to make further adjustments. We also note that the FSA put out some data from farmer enrollment in the government programs, which suggests that maybe all acres should be a little bit higher, especially in sorghum and wheat. And we've seen the wheat market collapse and a big sell-off on fears that the USDA might increase last year's wheat acres by as much as 2 million acres. As far as outside markets are concerned, a little bit of positive news between President of the United States and President of China having a conversation overnight, trying to get trade talks back up and running. Again, the Chinese would like the U.S. to drop all tariffs, and then they would come in and buy some U.S. ag products and other products. The problem with the market is that we're still at the Gulf kind of shut down. Yesterday there was word that maybe now as much as 4 elevators has power and may soon put boats into berth to start loading vessels. But there still may be another 8 elevators that don't have power, and 2 of those may have significant damage that it'll take quite a while for them to get back up and running. We'll be watching export sales data, and again, that might take a backseat to the USDA numbers, but in general, soybean and corn export commitments to date are below what some people think is the pace needed to reach USDA's export numbers. Most people doubt that the USDA will make big changes on the downside in corn or soybean exports because of what Hurricane Ida did at the Gulf. The big key is will the USDA in corn raise acres, raise yield enough to raise exports, given that South America is pretty much out of the corn export market. Weather-wise, U.S. 2 weeks of warm and dry weather should help harvest, but could cause a little bit of concern about winter wheat plantings. It's still dry and warm in the Black Sea. 2/3 of northern Brazil is dry and warm, and there's pockets in Argentina that's turning dry and warm, although the second week forecast looks for some more rain in Argentina. So in general, 11 o'clock will be a lot smarter than we are right now as far as what the USDA thinks in both U.S. and world supply and demand. The markets will react to it. Then we'll start harvest, and I think a lot of the main managed funds are not willing to come in and buy grains until they see a spark either in demand or the end of harvest to buy these lower prices. As always, these are my thoughts, not those of ADM. Have a safe and profitable trading day.